Friends, how we doing? Welcome back to Continues to Tick. Time continues, friends, in these markets. I mean, I'm not gonna lie to you, they really don't make sense to me. But as long as you're in the game, you're probably winning. At least that's what it feels like for me, because I've literally changed nothing in my portfolio practically since when I started about 4 years ago. And as I'm going to show you here, because now we're in a monthly dividend portfolio review, we got August, I'm going to show you guys how my portfolio is actually doing so well, and I'm actually funding the least I've ever funded. So make that make sense. So if this is your first time, let me kind of go over it. And if you've been here before, if you're a newer subscriber, welcome. I see a couple people joining this channel. Hopefully I have something to offer of value to you guys. The main thing here that I do on this channel, if you're new, is I just document my journey. I just want to document how easy it is to be a dividend investor. I have a very set it and forget it strategy. This is my actual blueprint. This is what I think is needed. Nothing more is needed to be successful. It's very, very simple. My strategy is very, very simple. I'll just leave it at that. But like we always do in these monthly dividend portfolio reviews, we go over a little bit more in depth. You know, for example, I'm going to tell you how much I fund my portfolio, how often. I'm going to tell you my sector allocations and percentages. And when we dive into that, I'll let you know my best and worst performers per sector. I'll also let you know my number of current holdings, my current portfolio's dividend yield, what is my expense ratio, what are my short and long-term plans for the portfolio, like my financial goals, and at the very end, you know, the favorite part, right? Everyone's favorite part, how much my dividend portfolio currently pays me in dividends. And honestly, this could have been easily a milestone video. As you'll see, you know, we reached a decent chunk size of the portfolio now, and it's kind of like a milestone. You'll see here in a minute what I mean. And towards the very end, you know, I do put timestamps down below. The topic for this video is why I focus on fundamentals. But I'm going to show you guys something here. This is something I don't show very often, but it's August and I finally hit, I think, the biggest milestone, honestly, that I'm mostly proud of. And I'm just going to throw it in this video if you're watching, because, you know, this is a very important part of my strategy for retirement. This has always been my game plan, was to go work for the state government, get a pension, know exactly when I'm going to retire, with how much I'm going to retire, get vested, right? So as you can see here, it's telling me my estimated earliest retirement is in about 21 years. I just turned 29, right? 29, 21, 50. Technically 50, 52 is going to be my earliest retirement year, eligibility, right, wise. And that's key when you're a state government worker. But let me show you something here. This service credit, right? So right here, friends, right? This is the most important part I want to show you. Yeah, you know, it tells you how much I have in total balances, yada, yada. But here it is right here. Boom. Vested for retirement. Yes. I literally just got vested completely for retirement from the state government in this month of August. A little clap for me, right? That was a big domino that just fell for my retirement, getting vested. This was my goal, friends. My goal was to actually get a pension in retirement. Now that I'm fully vested, I'm going to get one. For those that don't know what it means to be vested, oftentimes it's going to be a state government agency that you can work for. A pension, in this case, it's a defined benefit pension plan. So I'll just describe this one. It's going to be a payment. When I retire, it's going to be a check that the state government of California pays me every single month until I die. And I could set it up in a way where if I do die, you know, my partner, a beneficiary, can get some of that money after I die. But regardless, it's going to be a check that I'm going to get for the rest of my life when I die. And considering how this economy continues to move, sure, some people, you know, doubt that it'll even be there. Social Security, you know, people know that thing's going to dry out. Will it even be there? But a state pension, a defined benefit pension plan, it's supposed to be provided for life. And, you know, I'm on the same team as these very big politicians, state government workers. Maybe they don't need the money, but a lot of them actually do work for the state government, and they will get a pension. So I'm hoping that as long as they continue to worry about their pension and get their pension, I will also get mine. But this was a huge domino that just fell. I wanted to share the moment to celebrate it with you guys, because it's been a long time coming. We are vested, friends. But anyways, friends, enough of that out the way. Here we are, right? Like I said, it's a pseudo milestone video. I'm not making it a milestone video, but we're at $95,078.39. Crazy. Let me just show you right off the bat why it's crazy. Year to date, right? We started at $75,000. Right now we're at $95,000. Let me show you. That's about $20,000, right? Gained for the year to date, not even the whole year, right? And let me show you something. My funding history has been the least amount. It's probably gonna be on par with last year, but the least amount it's ever been. You know, you can see in 2020 I invested this much. 2021 it was a perfect year of investing $500 every single week, and 2022, you know, a good amount. And I went back to get my master's degree, and life happens, right? You have to adjust. Right now, when I zoom out of my life and I think about financially where I'm at, I've continued to work to try to get vested. Finally got vested. I've been funneling a lot of investing money wise, right, into my career development. Because for me, I want my job to actually be a really solid source of income, working for the state government, elevating myself in my career, getting a bigger source of income monthly from my job. That has always been my goal, right? That is how I've been planning out my foundation, right? Getting the highest salary I can get and then investing more. That has been my strategy. That's why you see all these drops, right? Because this was me like fresh out of college, not going back to school yet, not really thinking about career development, and you know, as you can see, it declined. My point to saying that is this year and last year are going to be about the same. I've made $20,000 in portfolio size year to date, right? $20,000. I've only invested $3,000. These markets are going insane. You can do the math. Make that make sense, right? Like that is why I tell you, be in the game, right? If you have not even started to invest, you're going to get left behind. And now with the potential cut of the interest rate looming, right? Like there's a big discussion about, oh, interest rates are finally going to get cut again. If they do, I mean, in my opinion and what I see, it's just going to add fuel to the fire. The housing market's not going to crash or get lower. It's just going to continue to climb from here. Like it took a pause, now it's just going to climb from here, which is insane to me. But anyways, rant over. I just wanted to show you that quickly because, you know, my portfolio is actually doing very well. You know, I'm 29 years old. You know, I started this around 24 years of age, and you know, my plan is unfolding right before my eyes. Working for the state government, getting vested, getting a pension, the dividend portfolio, focus on career development, trying to increase my income. Right now I work as a nurse consultant working from home. I'm really setting my foundation to one day allow life to be easier rather than harder. And that is the blueprint that I really am trying to practice and preach myself, and hopefully give you guys a bigger picture of focus on your career, invest in your career so you can get a higher salary, start a portfolio, investing portfolio on the side of some sort. For me, I like cash flow. I'm a dividend investor because I like the cash flow, and eventually I want to get into real estate, but I'm just not there yet, right? And then also killing two birds with one stone, working for the state government, getting a pension, so that way in retirement I'll have my pension, you know, I'll have my dividend portfolio, and hopefully I'll have real estate, right? And maybe I'm in a job that's super easy to work because maybe I work from home, so it doesn't even feel like I need to retire, and I work from my desk from home making a high salary, right? Because maybe I'm working as a nurse consultant into my 50s or 60s or whatever that looks like, right? Because I've set my career up to be easier in the future. So I know I'm rambling, friends. I just want to take a moment to just paint that picture for you guys. And as far as, you know, my slices, my sectors, I have it set to all time. So let's look at the best one, right? Tech is the best sector by far. You know, I hold Nvidia in here. If you've been here before, you know, that's the reason why. It's just 389% in the green. Financials is my next best performer at 129%, energy at 120, right? My ETF index funds, you know, 50% each, materials, real estate, and it looks like, you know, it makes sense for my portfolio to be doing as good as it is doing. Only one sector is in the red, and that's healthcare, and it's only down 3.39%. So it's really not that bad even. And in this sector, you have Johnson & Johnson up 20%, and it's really Medtronic and Pfizer, you know, pulling them down. And those are the sectors there, best and worst performers. And as far as my sector allocations, right, real estate is my biggest sector allocation at 13%. Consumer staples is at 12. My ETF is at 10, 10, 10. You know, for those few, we have 9% for financials, 8% for industrials, 7% for healthcare, communications at 5%, and so on, right? 3, 2, and 1%. And now going to the holding section. The initial chart, right, all the time, I always kind of struggle to show you how good my portfolio is actually doing. But here's just a general overview. And this one actually tells you the unrealized gain with the percentage. So as it stands, my cost basis for my portfolio is $71,000. I have $95,000 value at the moment of my entire portfolio with gain. My unrealized gain isolated is $23,970.66. Doing the math, M1 Finance did the math, it's 33.71% in the green. That's pretty big, especially for a dividend portfolio. This isn't a growth portfolio, but this is how I structured it from the very beginning. A lot of people are chasing yield. That's, you know, a method. I have very much created a portfolio that's a set it and forget it. I've done research at the very beginning of this journey, and I bought like 53 holdings or 54 holdings. I've cut like 3 or 4 of those holdings, you know, over time, over the last 4 years. The one that was most recent that I did cut was Walgreens. You guys probably know why if you know about Walgreens, but you know, my strategy is hold a holding until I'm given a reason to sell, if that makes sense. Very simple strategy. Buy and hold, funnel money into this thing, and I just cut holdings as I see the actual need, right? And if you look at this graph, you know, I actually just took the moment to actually notice it. So in the very beginning, right, funneling $500 every month. If you're curious how much I funnel right now, I funnel $100 every month. Since October of 2023, this thing just has taken a hit, like a hit of momentum. It's like, I don't know what happened into the market here, but something was injected. I don't know, maybe it was Nvidia that kept ballooning, but you know, if you look at my chart here, you can see it's kind of consistent growth, and then just boom from here. It just soars. And you know, I actually began to invest less money here. So that's just interesting to notice. I mean, part of it scares me, to be honest. Like, it scares me for the future. And, you know, it scares me to think that the people that aren't playing, aren't investing, are losing right now. Losing a lot of money to inflation, losing a lot of money to opportunity of growth, right? And then it's a presidential year, right? It's just, there's a lot mixed into this. And then the interest rates are going to cut, right? So it's like, I don't see the markets going down anytime soon. It's crazy because whatever, you know, recession, you know, people say a recession did happen, but whatever recession happened, it's like they masked it, right? I don't feel like we really felt a recession. I know things are tough right now and it hurts. Was this the bottom, and now things are just going to go up again? You know, we're just going to have to wait and see. As far as activity, I just want to show you some examples of some dividend payouts. I have Apple paying me $3.18. I have O paying me $10.74. Procter & Gamble 11. Alliant Energy 8. And every time you see a green here, you know, with like a random cent amount behind it, that's a dividend payout. And then you can see I do funnel my portfolio $100 every week, you know, just for transparency. And then every once in a while, you know, it'll do a big purchase, you know, 2 here, 6 here, 4 here, and so on. And then just to show you a little bit more of the data. So you did see on one of the other screens, you know, it did show 50 holdings in my portfolio. That is how much I currently hold. My dividend yield is 2.896%, and my expense ratio is 0.01%, if you're curious. So just a little bit of the data. The dividend yield, I mean, I expect it to be around 2.8 or on the lower side, just because my portfolio has increased a lot in terms of unrealized gain. Do I mind? Not really, right? Sure, I'd like it to be at least 3% or so, you know, 3.1, 3.2. You know, I'll take it. I'll take the unrealized gain. You know, it's a dividend growth portfolio, ultimately what I'm after. So I'll take the gain. But this is the data here. And then, you know, just to kind of touch on my expense ratio, it's very, very low. I like keeping it very low. I like managing, for the most part, my own portfolio, and it's paid to be successful up to this point. No pun intended. I'm not paying for it to be successful, but it's paid off that I've been keeping it low and managing it myself, right, is what I mean. So So what are my short and long-term plans? And then I'll tell you how much my dividend portfolio currently pays me. So the short-term plan, friends, and the reason why I do these updates is because it gives me a monthly opportunity to really think about what I want to do, which I recommend for you guys. Always take a moment, whether it's weekly, monthly, quarterly, think about your portfolio and what it is you want to do on the short term and long term. Always think about your portfolio, always think about retirement. So that's why I do this. It's just general practice. And hopefully it reminds you to do the same. So the short term, I'm going to continue to funnel my portfolio $100 every week. You know, for the people that know, I've taken a pay cut, which is actually a job promotion, to work as a nurse consultant working from home. You know, this is an entry-level nurse consultant role that I really wanted to get my foot in the door, and I took a $24,000 pay cut. That's a lot. But I took this opportunity because the runway in the future increases my potential income to substantially a lot more. Like right now I make about $110,000 working as a nurse for the state of California, working from home, which most people would think is a really solid and sweet gig, right? But I took this pay cut because before I worked at the prison as a nurse making $134,000, right? So I took this pay cut to make $110,000 because on this track, the higher level nursing consultants after a few years of experience can make up to $190,000 doing the same work. You know, crazy, right? So that is the reason why I did this. That's why I really focus on career development. That is why I really recommend you guys looking for career development opportunities. So for the short term, just to summarize, $100 funded into this portfolio every single week. That's going to be for the short term. The long-term plan is still to retire at the age of 50, 52. You know, eventually after I kind of settle myself into the job that I want, making the income that I want, right? One of these higher level nurse consultant positions, maybe I'll stabilize a little bit better, and then I can actually start to expand into real estate. But for the most part, I'm just holding the line here, continuing it onward, dripping my dividends back into the portfolio itself. And now I got vested, which I'm very happy about. And as far as how much my dividend portfolio currently pays me, I actually use my Div Tracker app that I got from the Apple Store, and it's practically the same. So what had happened was I did hit $2,500 a year. I did hit that mark, but that was with Walgreens, which honestly paid a very high dividend. So when I sold my Walgreens, right, it took that down. So now I do have less than $2,500. But this number here, which is the projected next 12 months, is what my Div Tracker app also shows. So currently, as my portfolio sits at $95,000 in size, I earn $2,477.79. And if you break it down monthly, it's $206, which is pretty cool. So we made it to the topic portion of the video, and I want to talk about why I focus on fundamentals. You know, there's a couple points here. I'm going to touch on each one just briefly, and we're going to wrap up the video with it. So why do I focus on these fundamentals? One, friends, is the ongoing market uncertainty. The markets are so uncertain right now. People are talking about interest rates getting cut, not cut. You know, there's a presidential election occurring. There's inflation occurring. There's so many things, right? The housing market is crazy. It's hard to get into real estate. People are getting laid off from their jobs. You know, there's just a lot going on. And that's the reason why you have to focus on what you can, which again are the fundamentals, the funding that you could do, try to hold the line, you know, allowing time to happen, just sticking to the blueprint and the game plan that you chose from the very beginning is what you have to do in uncertain markets. That is your fundamentals. The next thing, friends, is living life is most important to me. The reason why I focus so much on fundamentals is because it is one of the things I can control. And when you can control something, right, you feel on top of it. You feel less anxious. You feel less nervous, less worried. You could sleep better at night. If I could plan my retirement, when I get to the age of retirement, I'm already set, right? I'm less worried. I'm less stressed out. I can live life in a fashion that, like, I'm living more present in the moment because I'm not tripping. I'm not stressed out about what's going to happen to me in the future. That is a big key as to why I focus on fundamentals, because again, I only control what I can, but I make sure to control what I can. So that way I can stress less about the things that I can't control, right? Because living life is most important to me. How do I do that? By taking the bandwidth that normally would leak into financial stress, market stress, and not allowing it to go into those areas. taking that bandwidth and putting it into my life. And sometimes in order to do that, you have to make sure your ducks are in a row. You have to make sure that your plan is being executed, right? That your blueprint is being followed, right? That leads to confidence, that leads to less worry, less stress, less anxiety, because you feel like you're on top of your business. So that's what I mean by the second point here. And this third one, markets just don't make sense. As I was touching on the first point here, the market uncertainty, the markets just don't make sense. Like, make it make sense. Like, using my portfolio as an example, I've invested the least amount that I've invested compared to my early years of my portfolio. And my portfolio this year has increased so much in a time where people are talking about inflation, job loss, who's going to be the president, are we going into war, are we in a recession, all these things going on, right? Markets just don't make sense. There's a huge disconnection between what people can afford and what people are making, and how people are living or thriving or surviving. A lot of people right now are literally just surviving and just living, and it's very hard to thrive. And those are the three levels of life that I've pointed out before. Right? There's surviving, people living paycheck to paycheck. There's people living who are, getting by financially, but they can't really go on that vacation they want. They can't buy that car, that house that they want. They really can't have those kids or build that family that they want. They're just living. And then you have people that are thriving, right? These people are holding it down across financially, right? And they're also doing all those other things that I just told you people can't do, right? Those people are thriving. The people that are thriving are becoming less and less. The people that are surviving and living are becoming more and more. The markets just don't make sense right now. Every time I go get groceries, I spent like $140 on groceries the other day, and it was like 4 bags, like 3 or 4 bags, which is crazy to me. And every time you go out, if you're a party of 2, it's like $30-some. So I can't even imagine a family of 5 if you go out somewhere to eat. And I'm talking about fast food, right? Like 2 meals at Burger King, $15 each, that's $30. You know what I mean? Make them make sense. And this last point right here, another reason why I focus on fundamentals, and this one goes a little bit hand in hand with living life, but it's stopping the energy leaks. To worry about the market, to worry about things financially, those are energy leaks. That's what I was referring to, things taking up your mental bandwidth. In a day, in our lives, we only have a certain amount of time that we could spend focusing, worrying about things, right? If all your worry, if all your focus is going on how I'm going to retire, how I'm going to live my day to day, am I going to get laid off? All these things, those are energy leaks. Those energy leaks take up your mental bandwidth. They take the energy that you have in the day, which is already a limited capacity, and they take that. That is why I only focus on what I can focus on. That is why I don't really try to outsmart the markets. That is why I keep everything very structured, very rigid, very simple, and a very simple blueprint. Find an amount I can funnel into the investment strategy that I chose and do it for a long period of time. And don't stop, period. That's it. And then that is all the energy that I put into that. And now the rest of my energy, I go into living life, I go into career development, I go into side business, hustle, fun things like YouTube. That is what I focus on. And of course, into my relationship with my partner, my relationship with myself, my health and fitness, my mindset, my inner peace. Those are all things like I want to pour into. I don't want to pour and have all my energy leak into the things I can't control, and especially to worry about money. So anyways, friends, those are the reasons why I personally focus on fundamentals. And I'm gonna leave it here with this little vesting reminder. If you guys enjoyed this video, hit the like button. I know this channel is different from a couple others. It's really just a documentation of a journey. Hopefully you gain something of value here. Some people do, some people don't. Either way, I've been doing these videos for 4 years. I'm not going to stop anytime soon. This is the format as well. I document it just to show that it can be done in a very simple fashion, and it's happening over time. Where continues to tick, we utilize time to our advantage here. That is the game plan, that is the strategy, but we also want to live life at the same time. We can do it all, friends, and I'm showing you it's possible. Continue to follow this journey if you're interested. I'll see you guys on the next video, and until then, take care.